Good afternoon, guys. Welcome back to another video. Quite a long one this time. It's about last week and about, taking big losses and learning lessons from them. Because last week was my worst week that I've had, but the lessons you've learned from them, and even though I didn't really, I did trade badly, but more of this is from a comment side of things and sort of a risk event side of things. So it's a different sort of skill set, different type of edge, which I haven't necessarily got to yet. At times I'm very good at comments, at times I'm incredibly slow and I have to digest information, which is exactly what you're going to see over the SLR comment, and then some quick reaction with the Saudi comment as well, which makes my day even worse. So these are the things that I want to go through. I'm just going to set the scene and chart, debrief the charts, etc. And then I'll go into the price action on both of them. So I'll do one by one, etc. And then the key points and some lessons learned at the end. But mainly it's all about taking these lessons and I've done one of these dips before in P&L over comments as well, which I can't remember if I went through it, but it was over Brexit. And I took a big dip in P&L because this time I come back from bit trading being at home, and then I literally, dropped everything in the space of sort of 2 days. So taking a rather large hit as well. So it's learning there's a few things to learn, sort of how to scale out very quickly, which as you'll see here, I really sort of hold. Understanding like the correct markets to trade, what's relevant, all these different types of things. But I want to talk about the Fed, talk about SLR, and talk about this Saudi comment as well. So I'm going to set the scene first. So from the sort of the Fed, these are some points that I've made afterwards, the day after on the weekend. When I had a little debrief, I just took some notes, etc. So this is what you'll see when on the ladders as well. So the US curve as well, this was something that I was quite new to. I didn't really understand how the curve necessarily works or all the yield thing together. So what you had to work out was, to start with, what we did so much prep for this, one of the most I've ever prepped for central banks, because they're not my strong point. So you got to understand how the curve works and the short and the long end, which way, flatten, steepen, etc., and understand which end is going to mean the most, as we're talking about these possible dots bringing forward, etc. Understanding then the relative markets, the relevant markets, And I ended up, because I don't have the US treasuries, I ended up trading the Bund, which was the worst one. Obviously then it's not in the cash either. So that was the worst one, and obviously that's the 10 years. So that's like in, say, like the T-note, smack bang in the middle. So there was sort of the first error, but I understood how the curve works much better afterwards, and during we were all talking about it. It's something now I can understand, and obviously you've got all this inflation that's happening as well. So you're trying to then, like I was saying, which is going to be affected more, the long or the short? Is it going to steepen or is it going to flatten, etc.? So there's sort of your first point, and then understanding which end to trade. So ideally, I think, trading the short would have been much better. And as I'll show you in the charts of what actually happened, you'll see the reasoning on why I changed my mind. And again, being greedy in the S&P, I was up, 3K on the SPOO. I never got out. I was looking, literally got to the day's high and I never covered anything. It didn't trade through. So as you'll see that in the ladders as well. And this is something that, again, you can lean on, but maybe not in this climate, that the SPOO did another 10 handles when, I started to then buy more bunds. So I oversized massively. And then I couldn't get out of the position afterwards because it just unwound, and I'll show you again. It sort of just offered down like that, and there was no tick back or anything. So I oversized. So there's one sort of thing to take away from this about trading the relative markets, not oversizing, again in the wrong market. And then I cut reverse, I think is what I say. Yeah, started to drag the short end. Yeah, so short end started turning, and so did the long end as well. So then I cut reversed the SPU and bund as well, and I got quite aggressive on both sides. Again, probably the wrong idea, but everything started to reverse. And this is what, Alex was talking about, it possibly you can get the move up, and then then you get the unwind, and everything pukes and sells off. That was a possibility of the reaction we could get. We didn't get that. I started to see that. I probably cut reverse the bund too late, but then I started selling more. And that wasn't the trade. So at the beginning, in the first sort of 6 minutes, I was down plenty. And that's where it all sort of not necessarily went wrong, but then the way I tried to come back, I could have made things much better towards the end. Yeah, so once everything did that pullback, the reversal, you had a chance to actually go along everything. And I did actually try, and then I tried to get long as gold, S&P and bund at one point. At this point, I think at one stage I could have made half back if I got out of anything. And again, the trade in the end, sort of the trade was that passive long, which I just spoke about. And then this is such an important thing, is that how to actually execute your trade, how to scale out. I'll put it in red. Instead of just holding, which is something like one good strength I've got, just try and scale out, because these moves are much faster. Sometimes I'm holding my 10 handles on side an S&P, and it just really comes back rather quickly at me. So that's where I went wrong. There's a few things, and I'll talk about them in more detail, but these are the sort of the specific things of what I could have done better, or sort of just spoke through the trade in very brief. But I'm going to go in much more detail with that. And this is another thing. You've got sort of no change is what we're looking for in the dots, but the dots, I've never seen the dots come through in this format. It's always been a different format, which had basically all of these were nice in line. So you'd have median, median, median. You didn't have all this, shall we say, usually it's literally like this line. So the one in yellow, you have usually the 2022 and they have 2021 dots all in a section. So you wouldn't have got a change. So you'd have had a green one here, green here, green here, green here. This really confused me. So I reacted a little bit late. To be fair, I hit really quickly, but I didn't necessarily know why, so I got out of it. Just one of those little blonde moments, should we say. So this is the thing we're looking at, no change. So this is what we reacted off. I'll keep it nice and sweet instead of reading through the rest, but we're going off the 2023 dots and see if they were changing or not. So in green was no change. Quite self-explanatory, looking to get long everything pretty much. But then I'll go through the chart. So ignore the writing, because I'm the only one who can read this apparently. So we'll look at all the reactions, and then I'll do the ladders. So I got in, I think it was around I think this area. You could have got in much faster, but I then held, as you see with the arrow, all the way up to the top. And I think my average price might have been around here in the end. So managed to sort of get 10 to 12 handles on the side at one stage, looking for the new high. Didn't go all the way here. Yes, I held 6 lots. So it's just having quick pointers of where I got in, etc. Really, this was sort of the best trade, the passive long. I do start to buy here again and try and hold that move. Again, That's more of the trade, that passive long. I just watch this then, like I say here, I just watch this come back, etc. So wasn't really the best idea, because you've got to be really quick, and you see so many central bank meetings where they do this, a really quick reaction, and that's exactly what you get. So where the error came into play was buying bunds and keep buying bunds in the top, then it rolls over, then I have to get out, get caught in this one, cut reverse. And again, I was thinking back through the open price, you saw everything else turning around. Then I felt like that trade was going to happen. You could get a puke, unwind, look for, you know, the new lows or something like that to just scale out below. That didn't happen as well. So just oversized, trading in the wrong bond. Yeah, so the shorter term was the better option of the US side. So that's where that issue came along. As you can see, not the best reaction. Then you got that passive long afterwards. Come on. So this is what you got here. So you've got the longer term treasuries there. You see their reaction. Then you've got the 30-year, the 5, and then the 2. So I'll just put these 4 up, and these are the reactions you've got. As you can see the longer ended ones did much more of a reversal, tried to go bid, they failed and rolled over. That's after, and then the bonds as well. Again, then the 30-year reverses, but obviously doesn't go as far. Very similar though. So you get the longer end coming off, and then you got the shorter end which stayed more bid. Where you got the 2-year had sort of a move up, come back, and then went up. Then the 5-year sort of blipped up, come back to sort of scene of the crime, and then grinded its way back up. So you can see the reaction between all the bonds, and you can see where you get caught here. Oh, you get caught here trying to then sell bund, the longer end. So you sort of got that, you know, this move back down in the longer, and then the shorter started doing this. So you sort of do get that like more sort of flattening type move where it sort of comes back a bit. And then obviously it did catch a bit afterwards and sort of grind back up. So when you start to see this, you can then start getting long the bonds and the S&P, etc., and gold. And that's what I'm going to go through now. Gold, I did try and play gold as well. And I felt, and again, gold technically looked good as well. And you'll see in the execution that, again, I'm trying to hold and look for more. And again, I did try somewhere in here very stupidly. And then you can see this structure. I start to then, once that structure breaks, I tried to get long in here, sort of around this pocket, looking for the break up, which we broke through the level. And I'm thinking, let's get some more stops and unwind. Which again is a shame, but then obviously it grounded away. So yeah, I mean, over the course of all of this, I didn't really feel like I traded. Oh, and this is the Tino. And I didn't really feel like I traded really bad. I just mainly oversized in the bonds, and as you'll see by the P&L, that's where, you know, it really hurt in the end. And not getting out of the S&P in the beginning, even when I'm trading afterwards, how could you scale out? How could I make it the day not as bad as what it was from the beginning? So there's a few points I'll go and talk through. That's probably it, yeah. So there's the last point. So I'll talk through this one first, and then we'll be able to see. So I'll just put up what you're looking at. So you've got gold, Bund, SPU, and then you have NASDAQ here. And then I believe these are the euro dollars, which didn't really necessarily understand too much, but I put them there just for reference anyway. But as you can see, I start down already on the day, and then we sort of go from there. So I will just press play, and then I'll go through each of the markers and each of the points that I've got. So this is when you're coming into the meeting. So you've got about another 30 seconds. And I'll just play it through normal speed for sort of the first 2 minutes, and then, you know, you can see, and then I'll show the rest, etc. And you'll see all the reactions. So the main reactions, I've got all the ladders up, you know, in the format, which are the main important ones that I've got. So you got about 10 seconds, and you can see the reaction is quite, I don't know why I react really fast. I just went off just one of those little blonde moments. It comes out about now. So you can see there's the first reaction where I do initially buy immediately. And again, you can see the bonds there's nothing in the bonds whatsoever here, which probably should have mean something to me. I necessarily got out. I just had one of those blonde moments and trying to understand what was going on. And then after I started to realise, and the way it came through just really puzzled me, and it really threw me off, when really, if I just needed to find the one thing, who cares about the rest? Because we're all probably looking for that sort of reaction, you know, that hawkish reaction of those dots changing. So now this is the proper position. As you can see, this S&P, the gold, start piling, you know, getting in, start, you know, 2 clips of each. And as you see, I go on side and I just carry on buying, really dragging this average price up, much worse. And then, you know, S&P is going on side, you know, 6 handles or so, you know, on side in both. And then the S&P carries on going, and I feel like you can get a new high out of this. We'll just watch the first, you know, few minutes of this. So now I've got everything in the S&P. You know, you can see I'm holding, and then I've got basically full size, you know, 4 clips long in the bund. I would try and buy gold, blind, because you're close to near those levels. Maybe you're going to unwind those. Should have paused. Hold on. And then as you can see, everything starts to... I didn't pause at the markers. Right, I just wanted to show you this point first. So the P&L high point, I just wanted to show you because you can then see what I mean by at the end, by learning how to cover. Okay, I never even saw how much I was up in the beginning because you're so focused, I didn't even see this. But this is where, yeah, I should have, you know, I think my price was 46s. So I'm well on side. I'm looking for this at the break of the high. But as you can see, I've got nothing out. You can see this isn't really going. This was just a terrible trade. This isn't going. I started buying, I think, 17s, and I've dragged my price up 5 ticks. This is just the wrong market here. So if I'm not going on side, I should have looked to cover a bit of that much quicker. Should have been not so greedy, shall we say. So I just wanted to show you that point. And then as you can see, it all just starts to really come back. And as you see, you know, the P&L just completely drops. And this is when I start to, you know, mainly you want to watch the bund at this point. Try and get out of the bund. And as you can see, it's just so empty. Eventually, it just seems to just drift. Let's see, there's no trade back at all. You know, and then, you know, P&L really turns. So this is just showing, trying to get out of sometimes with a market that hasn't got the liquidity to do so. Can be quite difficult. So there I can completely trade exactly the wrong market. So there's the first point, and this is in the first 2 minutes, you know. So as you'll see, now it's even much worse. So now at this point you're down 3,000. So that was the lesson learned of afterwards, you know, making sure you scale out of something, you know, not necessarily being too greedy, because now I don't necessarily even know why I'm still holding this. thing. I think maybe because my average price is here, you know, you're so far offside. It's really just, I watched this back and it's just really poor. Should have definitely covered that much quicker if I could, hit market. If not, that's what I should have been doing. At least holding way too much on. So at this point, you're down 3k, and then do I just go? Yeah, is this the bit? Yeah, so yeah. So this is where now I cut reverse both, because I've seen everything turn, and then it seems to be a bit more to the downside. I think maybe then these bonds can unwind once it starts to break that open price, etc. The S&P, I start to get aggressive that as well, because we've all turned, you're looking at that correlation. And again, this is where things, you know, again, don't really necessarily go to plan. I start selling way too low in the bonds. I mean, you could have noticed this much faster, you know, selling up at this point. And again, get up to 5 lots in the S&P, and I got up to 12 short bonds. And again, if you've noticed that I seem to hold it, maybe I was sitting there trying to make your P&L back, which again isn't really the point. You know, again, selling, you know, some more into the lows. Yeah, okay, I'm, you know, 16 short. If it extends down here, great. You know, you can make some, you know, good money if there's a little splash or something, but there's no splash. Nothing really wants to turn. Everyone knows it's more of a, you know, balanced, not balanced, but much more of a dovish scenario. But again, all these lessons learned are for like the future as well. Like, I'm not great at these central banks, but watching this back and debriefing this in a good way, you'll understand that what markets to trade, what's relevant, etc. And again, you let yourself go off to, you know, up to 16, you know, everything really starts to turn again, and you can't get the offer. And it's just really poor that, you know, 12, you're just letting this go offside, and it's just need to manage this much in a faster way by trying to scale out around your price. You're selling way too low, you know. And for my, you know, watching it back is not very good. And then I sit there and you get rather frustrated. You know, this is in the first 5 minutes. So, you know, it's also sort of like going through all of this is that to show also that, you know, what happens on sort of the bad side, rather than always trying to show you something really thought out and well structured. This was all really thought out, but I executed it really poorly. You know, and I'm sure some of you guys may go through the same type of experience, and, you know, it's not always the same, you know, trying to show all the good stuff, where me trying to do this makes me learn even much more. If I press play, so this is the point where I tried to go back long, I believe. Yeah. So if I'm just going to fast forward this, if we play this at half, it's over here, isn't it? We got up to, yeah, so we just play this at 2 times speed for sort of like the next, it's 5 minutes long, I think it is, yeah, 5 to 6 minutes. And I just show you, again, where then sort of the correlation and everything starts to turn again. So I look to then to get back long the S&P, get back long the gold I do, get back long the bonds. And really as well, just from a normal trade point of view, this little, you know, curve down here at the bottom, that little ledge can create such a good support. The fact that we bounced back above there was another great point to, you know, to get long. So looking to then get long, you know, S&P, you see everything then turn. And again, this is another massive lesson about learning to try and, you know, not hold, well, scale out of something. And watch the gold here. You can ignore these, but this is the levels here. These in the orange. This was the levels I was looking to break. As you'll see, it should break in a moment. And then I tried to hold through that and buy more. As you'll see, it blip And this is where, again, sometimes your profile skills come into play and understanding what sort of level it is more than what, trying to necessarily be greedy. I think possibly I may have been trying to make everything back because I've never really sat in this scenario before. Don't get me wrong, I've never had a day this big. So I don't necessarily know, not necessarily always going to be recoverable directly the next day. Possibly it can, don't get me wrong. But this is where, again, you got the blip and then you're through the level, and I double up now. I feel like it's great. Now this can have, let's see if this can have one more last blip. Two more clips in the other markets as well. And at one stage, I'll pause it, but I feel like there's a chance where this can really sort of then take on. So if I'm going to pause it, and we'll watch, a little bit, and I'll explain what my the thought process was. As I've said, the correlations start to change, and technically I felt like the gold had much more. And it started to make something back. And in the end, obviously, it doesn't necessarily plan out. The Bund, I could have stayed long from here onwards. I'm just looking for this gold to have one last extension. When it's got the cave, it showed that. You've got everything else in line going with you. S&P still up high. And I felt like it sort of took the high and it just never sort of continued. Again, took one tick the high. This trade, it really was so close to being right. If that just could take another, in my head, it's very frustrating. And obviously then I puke it. But in my head, I was like, well, you're in long from down here, the 89s. Then you buy more as we go up, and then there's just no real continuation. I still try and hold on to the S&P because I don't want to get out for just the sake of getting out. I want to get out for a reason or a target where I felt like this had more. I felt like the S&P could go a little bit more. That was really sort of the main thing, and you could just sort of see the S&P didn't really want to go in the end. But at one stage, this is what the outcome could have been, and I show you this because, again, it's talking about scaling out when's the right time, not by being focused by this whatsoever, but when you go back through, you can realise that trying to get out of something here, and here. Obviously, it didn't happen, but what am I? Just over 20 ticks on side. S&P or 4 handles on the side, so there's 40 ticks on side. And this point between two markets with some nice size on as well. So there was a possibility to actually make something back. I halved the day at this point. So again, it's just talking about trying to make sure you scale out, not necessarily be greedy. Maybe in my head, that's maybe what I was thinking at that point. I think that I was trying to make it back, but make it back sort of in the right way and try and have a real clear understanding. I feel like if I didn't cut reverse, I probably would have traded this maybe a little bit better. So, but yeah, it's not like I really feel like I traded horrendous. The cut reverse was bad. Trading the Bund itself was really bad, but I think the other two weren't so bad. You're on the side really well in the spiel on the first one, quite well in the gold on this point, just really bad execution in the bond space. So what I take away from sort of this point is that poor execution in the bond, the wrong bond itself, well, necessarily like the treasuries, you want to be trading those instead. I learned understanding the curve much more, and I understand all the way the correlations played. So execution wasn't so bad. It was just really in the bond space. As you can see, down here, at this point anyway, obviously it ends, quite terribly. But I feel like understanding the right let's say, mentality of it, etc. And if I quickly, I'll do that in a second. If I go back to, I hope that comes back, by the way, because it should be there. I hope those key takeaways are there. From coming back to this point of view, you know, let's say I was greedy quite a bit, not covering anything. I learned the curve, you know, short and long end to trade. Another bad point, I oversized in the wrong market. I'm not scaling out. You can take some real positives from the whole execution point. You know, that's what I'm saying. Like, it wasn't all bad. The SLR, for instance, was bad. Much worse, much worse. Much worse on an execution point of view, but it's a different type. So compared to what I'm going through here, and the other point is that two different types of ways, but I'm just trying to explain that what I've learned from that experience and what to improve on. Hopefully I didn't complicate that too much, but hopefully you guys can take something from your own experience from this point. But I want to get into the SLR and the Saudi comment. So let me get into that now. And I had some points from our elite trader and how he traded it and the way I traded it. You know, compare the two was, you know, adult and kid, shall we say. But this is where I take sometimes a long time to digest and see when things come through. I'm a bit too slow. So we start with the SLR. I sold after 30, 40 seconds. Way too slow. I was taking in too much information before actually making a decision, when in my head I knew what my decision was. This is after it all happened. So I'll quickly talk about this before I go back up there. This is what you're looking at. Supplement leverage ratio expires March the 31st. I didn't see this red head when it came through. Basically, all the other stuff came through in like this color yellow. And I was looking at SLR relief in Friday's statement. I didn't understand really how it came across. I felt it came out in a poor way, but that's the way it comes out. That was my fault for not seeing it expire March expires. So that's why I reacted really late, the way it came through. Anyway, I still thought it was big news at the time, but then this is a bad decision because it's unlike the vaccines, which I did really well on, don't get me wrong, but these comments and risk events are so much different than having vaccine where you could buy high. You can't do it with these because, you know, you'll get a lot on comments at the moment, you're just getting constant pullbacks and you get in the blip ups and it's coming back and then it wants to go. You know, it's not just doing that 3, 4, 5 minute straight line move, it's just going 1, 2, coming back. So you've got to then learn how to scale out, like I said, but you can't then be buying here and here and here because you get, you know, completely destroyed. Because you come back, your average price is then in here and you just get out, or you hold and you pick the low and then it bounces. There's your other scenario. You know, you stomach that pain. And this is where sometimes I thought my experience would come into play by doing this scenario, by letting it go offside, holding it. To me, it was a complete wrong mistake. It was just a horrendous mistake that I made. You know, I could still have my vaccine head on, possibly that's why. It's a completely different type of comment. 100% agree with that. You know, that I have, basically the end result was there has to be another way for me to either react faster or trade in a different way. You know, if I'm going to be much slower to react, there's a different way to trade this by being on that more passive side. In the end, I did make something back on, you know, being a bit more passive in the S&P. I did manage to sell the pullback towards the end. And then, like I say here, I managed to make like 1K back in the end. So what I actually lost over the SLR, I wasn't too disappointed. It was the Saudi thing that really shot me in the foot. And again, we can learn something from this as well. Yeah, you were going into the OPEX, in the SPU, quadruple witching. And I saw, and this is something that I took from the other time on the FOMC. I was like, I'm just getting out of something. I've got to make something back. Sometimes that's maybe the wrong head to have. And the SPU actually did do the technical trade I liked, but he was holding into OPEX into SPU, the OPEX in SPU. That was just really, for me, I don't necessarily trade. I didn't know what was going to happen. And I was just down, so I just got out of something. You know, I was 4 lots short, as I'll show you. And I was just had to make something back because I was, you know, to be honest, I lost 5 days in on the bounce, which doesn't help and make the week a much more painful. And the Bund again, the wrong market. And then the US Treasuries were much better. They did react in a similar way, but they were much better. You could have actually got out of something, actually went on side. So all those highlighted things that I've just done, there was quite a lot of negative points in these, but you've got to take this on a hugely positive way. So the last point, can I move that? Yeah. This was Reuters, like Bloomberg was much faster to this. So it came out actually 3 minutes before. But basically, source tells the state of Riyadh refinery was subject to a terrorist attack with drones. So basically what happened was this Yemen business, I believe, they were using drones and they basically hit Aramco. So as soon as the word Aramco came out, I reacted to be honest, probably one of the fastest I've reacted, because in my head, I've been reading some of the stuff about Yemen attacking and, obviously they're not getting anywhere with it, but I was like, in my head, if they do hit anything and oil does get affected, then, oil's just gonna fly and it's just gonna do 1-2 points very, very quickly because they've hit oil. It's like a terrorist attack that comes on or that comes into play. So that basically within about a minute got denied and it just blipped off the page. And then I puked it and pretty much puked the bottom. I took like 15 ticks, a 15-tick loser basically on full 20 lots. But in this, there's something that one of the other guys on, the floor traded this really well because I watched it. And I'll explain that he basically left some bids down below because if this doesn't go, if this is denied, it's going to blip down and it should come back. So you get the move up, then it stalled, and then you got the blip down, and you put bids down here, then it should come back to the same price it started. So then you actually scratch it, or you make a little bit on these, because he actually decided to unwind the position, because if this was real, it should have already gone by now. But I will talk through that and mainly talk about the execution of the beginning and how slow I was to react, because you'll see how slow I was. Oh, actually, first, I'll show you the charts. Right. Again, ignore my handwriting. Late reaction. This is the SLR. So I literally got short down here. Very, very painful. This is what I mean by things are coming back. I thought this was really big news, the fact they weren't extending it. That's quite poor. So sold in here, and I managed to try and hold everything on the way back. And then I think I literally held the whole of this. I believe. Or maybe I puke in here. We'll have to go back and see, because I start playing the 1 minute structure and got big again, and that didn't unwind, which I really felt like once this low goes, we're gonna collapse, because this is big. We're still gonna carry on this move. Didn't work. So this is where, well, if I quickly talk about the slower reaction, I trade these slower reactions looking at these 1 minute time frames so much better, because I remember doing this multiple times before. I remember doing it over a Brexit comment as well, where I traded the bund and I traded the 1 minute and I traded it really well. Similar sort of pattern where as soon as you start getting back through the support of people trying to fade it, buy it back, you get some kind of unwind. This was the S&P. As you can see, much more reactive. And what prices did I sell? Around here somewhere. So again, super late. I actually go on side in this, as you know, somehow I was amazed. Went on side and then I hold it. Don't get out. So then I'm holding this all the way back, all the way back. I think I start adding in more 1 minute time frame through here, comes back. I think I just give up in the end because I just lose, which again, poor mindset. But in my head, I'm going, you shouldn't really be getting out until back here. Very painful. I resell in here in this little really small 1 minute time frame. And then as you're going down, I got out in this real chop because it was OPEX as well, around here somewhere. As you can see, it was OPEX with that volume spike. So that's where I got out, and then you just got this unwind, and I wish I held because you'd have made a nice chunk back, but I managed to make, like I say, I managed to make like 1K back in here. So yeah, so, I mean, I traded these like 1 minute time frames much better, and on a passive side, and I'm at the end of all of this, and hopefully, as we saw, my takeaways weren't there. So I'll make sure I'll get that up, and then I'll be able to talk about what I want to do working forward. Anything else? Oh, this was the oil comment. This little box. This is 5 second chart, by the way. As you can see, it does pull back and it just never goes. This should be trading up here by now after the first, and that's what I mean. It's such a massive denial of, it's like a 30 tick denial coming in. I mean, it's huge. It's bigger than the actual up move, which was very, very surprising. Put that back down there. Yeah, so I think I ended up puking horrendous prices. But anyway, and these aren't there, and that's not good. That's not good. Right. They are there. One. Oh, okay. Oh. Right. Quickly, I'm just going to get... Oh no. There should... There's my mouse. It's really laggy. Right. Oh, I'm already showing the end. Okay. Oh. Right. Full screen. Should be on normal play. Right. So this comes out basically dead on 1 o'clock. Quickly put all the ladders you want. Basically, Bund is here, Spoo. So you've got 5 seconds. So these are the two main to focus on. Right. So as you can see, reactions. Right. So I pause this, and we'll quickly go back to I just wanted to pause it on, let's say, the best prices you could get. I just want to put this up here as well before anyone misses. So these were the best prices you could get. Obviously, I wasn't paying attention, clearly. So these are the best prices you could have got off the bat. So you're probably selling 9s, 8s in here, super fast, if you're getting 17s, 16s, 15s on this. So this was the best reaction you could have got. So I'm, at this point, reacting really slow, puzzled, okay? You can tell by, this isn't something else, so I'll explain afterwards. You'll actually, even if you sold best prices, you're going offside in the Bund. And I'm trying to understand and read what it said, whether it's expired or not, where I just take such a long time to react. Look, I'm waiting. Look, I couldn't even get sell 12s. I sell 8s, sell the bottom of S&P. I mean, I reacted so late. It's very frustrating to watch me do this. And as this is at its low, I sell more S&P, then I'm going on side. And watch again that I just hold it. I'm not covering, okay? And then I start selling more aggressively, and this is the wrong thing to do. Again, just the point of, I actually was making something at this stage as well. But just a quick way to explain, and there was something else I wanted to explain, which now I think I forgot. I'm trying to, it's sort of, it's reacting off the price action. I'm usually really good at doing stuff like this. And I sometimes just seem to have these little moments where I need more clarity and clear understanding. The problem is you don't, because the price action shows you what was going on. You saw the blip down. I mean, it's not going to blip the wrong way, so it's really frustrating that I reacted in this way. Yeah, I sold up here, I'm on side 5 to 6 handles, whoopee. But I should have been like 10 plus handles on side. I should have been selling up here in the bonds. I should be 12 lots short from up there, but looking to then try and scale out. And this is what really frustrates me when I watch back, because I know I'm much faster and I could do 100% better in this. And to be honest, I make it even worse for myself, if I'm honest. When I'm holding this all the way back, I'm not getting out of this, because I think this is really big. And this is a massive mistake at this point. And this is where I was watching this back and I was getting really, really annoyed at myself with what I've actually done. Don't need to be going offside with 4 lots of S&P. I just thought it was really big. It was just going to straight line. I should learn to cover something quick, maybe quicker in the bonds, etc. I felt like S&P can still go. It's around my average price. What can happen? Can we make a new low? But it just seems to then, this buyer here just seems to push it back up with that, around where my price is. And I'm trying to get out of the bonds, covered at 1 clip, back to 8. And I'm just literally just watching this back, very frustrated, because it's really poor, because I'm thinking it's big, but I shouldn't be holding this amount really offside at all. As you can see, it's not doing me any favors at all. And what I do, I let this go further away, because again, another thing, you can't, these are the prices you could have got. Sorry, from 21s to 17s, you could have sold here and here in S&P if you were super quick. I shouldn't be selling down here and here with 4, 1 clip maximum down here. Because you're paying a huge 10-tick price here, and I'm still holding it, still losing way too much. But like our elite trader said, you can't sell worse prices and put good size on, because you are prone to, exactly what happened, that pullback, and you sell down here, but you go on the side, so you start selling more, and then you get that massive move back up. So this was something that I hugely learned. Hugely learned. So from this, as you can see, look, I'm miles offside. I'm like nearly 10 handles offside. Why am I letting myself do this? Because in my head, I felt like it was huge. And it's come back basically to the entry prices of both. But I should have been looking to unwind this position much faster. And this is, over a bit of time, I'm trying to think is that doing it this way, I will have huge dips in P&L, and I will just throw away good P&L that you make technically, because that's where more of my edge is in motion. So doing this is exactly what I did in, when was it? September before the before the vaccines happened. I think it was October or September is where I was trading the Brexit stuff, and I did well on one thing. Then I managed to get, then I got more cable limits, and then I was being way too aggressive, and then the comments just were meaningless. Okay, these necessarily weren't meaningless comments, but it's a very similar way of me trading, that you're holding on and you're just losing, or you're not reacting fast enough. Whereas, just thinking about it now, in December, I traded cable, the best I've ever traded. To be honest, I made back all the P&L I lost throughout the whole year. But that was because I was reacting really quick, understood such better narrative of what was going on, and I was actually scaling out really fast when things weren't going. So it's just taken a bit of a turn for sort of the worst, shall we say, and just sort of bringing back those kind of thoughts. To be honest, like doing this is just sort of like unacceptable in a way. It's happened now, but sometimes maybe you need something like these to make you learn something else. I don't lose P&L like this technically. It's just not sort of the way I will go about it. So where are we now? 07. So this is the pullback. I think this is basically just to show that I'm still in. And if we go to the next point. So we go to the next point, which is basically where I resell the S&P in that really tight little 1 minute range on the breakout of that. And I was just trying to show that, trading it in this way for me, it makes a bit more sense. Obviously, dropped plenty of P&L on this, and I'm a bit frustrated. To be honest, obviously Alex sits next to me, and he was basically saying at both of these times, don't get tilted on these. Still trade with the right mindset and the right approach. Yeah, you've seen your P&L, but he was just saying, like, don't go on tilt. Don't make this worse by making silly mistakes. And as you can see, trying to work the Bund again, trying to play this like 1 minute time frame kind of stuff, and then obviously the S&P. So everything's like pulled back at this point. I think I was going to play this sort of 122. Okay, let's just watch this for. I'll do it in. 120. So another like 3 minutes, which I can probably fast forward to the sort of Saudi part, or I will play this in. I'll just play it in 2 times speed for the next sort of like minute and a half. That changed? Yeah. So I'll move that out of the way. Mainly looking at just trying to be on a bit more of a passive side to this, because the quick money came very quickly. If you reacted really fast, but then you've got to be passive. But then you can't necessarily be aggressive on that passive side. You have to try and work the position a bit more. So then I tried to work the Bund. At one stage, I do actually start to do okay on it, like down here. But then I felt like it was going to break the low, and it didn't. You're watching then the US Treasuries at the same time. Then you're just trying to then keep the S&P. I felt like the S&P technically could have a move down through a nice range. And I think sometimes maybe the stamina wore out of me, etc. Because, you're down this amount, and I just basically got to try and work to understand how I get faster, and or you get faster or you trade them in a different approach. Maybe if you don't understand the way it comes across, don't sell the worst prices, people will end up, taking profit. And a lot of the time at the moment, all these comments that are coming out seem to be pulling back much more. And we've already got to the Saudi bit because I talk too much. Right, we'll go back. Right. And then I'll put it to 1 times, back to normal speed. Right, so this comes out in the 23, and you'll see my reaction basically. So you just want to ignore the other ladders for now. You just want to react on the far left one, and we'll just talk about that for the time being. So as I say, the drone attacks, and they're attacking Saudi. They're attacking the Aramco basically, the biggest in the Saudi. So as you see, it comes out. Blip's not too far, get 1 clip in, and then I know how big this is. I literally pile in up to 20 lots, looking for this to immediately go on side, like it does. At one stage, the P&L does go green for a few seconds. So as you can see, on side, 15 to 26 nearly, and it just doesn't seem to go. And at this stage, what one of the other guys was saying is that he was actually covering the position where I'm so down, I'm thinking this could possibly make everything back, and I know this can just fly. And then this is when the denial comes, and I tried to get out at 81s and I don't, and then I end up getting filled. I end up getting filled back up here on the flip back up, and I end up paying like worse prices. So I took like quite a heavy loss there. But like I say, what you can learn from that, shall we say, is that when it was stalling, it wasn't necessarily going around the double O's to sort of say my price wasn't really going. So I should have probably looked for them to scale out something, like reduce the amount of size I've got on. Because if I covered like half, my P&L wouldn't look like this point at one stage, because a lot, it's doubled in the amount because of what I lost on the Saudi thing. Maybe I shouldn't have gone so big. But I really prepped for that. And that's why I was reacted super quick. I managed to get on side, got really big because I knew the potential, the risk reward to say losing 15 ticks to making 100 there was, if it came out and it didn't get denied that fast, the risk reward could have been fantastic. If that went sort of like 30 to 40 ticks, you would have started scaling out something, but still trying to run, like a good part of your position, because the people think it's true, but they came out and said no. Basically, they said no oil supply was harmed, and completely deny it straight away. Sometimes you feel like it's a bit uncalled for, but it's the way it happens. And a big lesson learned, because you take so much from losing in that scenario. And then, that's sort of pretty much the end. I'll play this last bit. I'll play it in let me just play it in 4 times speed, because it's just pretty much me covering in the end. Actually, no. Hold on. I just want to see, because... Okay, no, we play because I think, I start selling more buns. So you're 5 minutes away from, or 3 minutes now away from the OPEX, and this is what I feel like could have happened. So I put my bids down in the S&P. I'm okay with where I'm in. I've got good sort of risk reward, I feel. Just looking to get out, and then I'm looking to play that 1 minute structure like I explained in the buns. So then I'm back on side. Some make P&L back. And another thing is that I do really love to hold a position and size. It's something I'm really starting to sort of develop for. I'm starting to develop, and as you see, I'll get back up to 12 lots, and then I'll start going on side again. The S&P is washing about, cover something, and I feel like the bund could at least try and attempt to make the new low, at least. I know this is super quick, but it takes, it's like 6 or 7 minutes, and I know you don't need to watch it all, but I'll just then selling up to 15. I'm really trying to hold the S&P for a minimum of scaling out down here, and then like a new low, and then the range break it had. And then I'm looking for the bunds to come off as well. I mean, it just could never break down here from this little volume ledge. It just never seemed to want to unwind, because I really felt like it takes this point, it should be trading the minimum of, the low. And in the end, there's 20 ticks there, a good amount of P&L to be made, and then you scale out below. So I was really thinking in quite a good process at that point anyway. I never really felt like I was going on tilt, because I held the bunds the whole time. I held the bunds the whole time. I got back in the S&P. I managed to get back up to 4 lots, a couple of clips. So I didn't really feel like I traded that part bad. I traded the passive part much better, that more technical part. So what you sort of then learn from that experience is that I was too slow, trying to digest information, just not a good idea. You've got to react much faster. You trust the ladder, etc. But this last little point, the key takeaways and the lessons learned, I've probably explained all of these already, through the whole time. Big one was understanding how the US curve works, the longer, the shorter, which ones should, the movement and the correlation, the steepening and flattening, etc. And this, understanding this, which one it's going to affect in what way, it's going to be like the correct bonds trend, the correct treasury to trend, what end of the curve is going to move the best. That's where then you can, say you get something very similar and you understand how the curve works in a couple of years' time, or whenever, you'll be able to put much more size on with much more conviction, much faster, and you're not going to be in that more of a shock scenario. I think another massive key point is how you want to exit the trade, how you scale out. Make sure you have that in your mind, that how you want to scale it out. If I got out of the S&P, for 10 handles on full size, great, because I'm not going to have lost 5,000 on that day. I'd have lost much less. It would have, probably would have been flat on the bunds. I may have reacted much faster because I was, concentrating. Maybe I need to hold. Maybe it's going to be a huge move. The SLR, for me, I reacted too late. But looking forward, I need to find a way. I need to find a strategy on how to react quicker, or much faster. Learn to trust the ladder, or I trade the more passive approach. Both times, yeah, I made FOMC. Yeah, I didn't really on the passive side, but on the SLR comment, I made something on the passive side. So there's two ways to approach this, and obviously everyone's got completely different skill sets, but the fast ladder money, or a bit more of a passive approach, because, and again, it's what the market seems relevant and how it's going to react. If it's nothing new, it's not really going to react. So again, repeating myself, what markets are going to be relevant, like I've put at the bottom, understanding which markets are going to be the most sensitive to news, to risk events. Go back and have a look at how they previously reacted, because that's what I'm doing now. That's why you're getting all these different data points which sometimes aren't really moving, like the PMIs this week. They just weren't, there was just nothing to trade because they're not relevant currently. And again, if you're not getting the greatest and the best prices, you have to be the passive above, or you're just going to do ring and get destroyed by selling here and then just watching it come back, and just you've lost money. And yeah, pretty much that is the end. Some proper good lessons learned in this. Sometimes you need these big dips in order to learn to grow this, that, and the other. So, if you guys have had the same experience of being like this, don't get frustrated, because we all do it. And I just wanted to go through sort of my bad week and what I've learned from this, you know, from how this has come across, you know. So that a bit from me.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.